It's no secret that estate taxes can shrink estates, and spending the time to ensure your estate is set up as tax efficiently as possible can save your beneficiaries thousands or even millions of dollars. Now, the good news is that estate taxes won't apply to most people, but here in New Jersey, inheritance taxes may apply to a lot of people, which makes it important to properly set up your estate. Hi everyone, my name is Angelo Cirinelli, and I'm a financial planner in Verona, New Jersey. In this video, I'll be going over the basics of estate taxes, inheritance taxes in New Jersey, and some ways around them. So starting off, there are two types of taxes associated with the passing of a loved one in New Jersey, or even if their property is located in Jersey but they aren't. There's estate taxes at the federal level and inheritance taxes at the state level. Surprisingly, Jersey used to have an estate tax as well, but got rid of it, which I think is probably the only instance of this state getting rid of a tax. So when an estate is being settled, a screenshot is taken of the deceased's assets at the time of death. Debts are paid off, charitable donations are sent out, and then the remainder may be taxed before being delivered to the beneficiaries. And then, depending on the beneficiary class in New Jersey, an inheritance tax may be paid by the beneficiaries after receipt of the assets as well. So starting with the federal estate tax. This is a tax levied on all estates over $13.6 million in value. If the spouse of the deceased is inheriting the assets, then there's no estate tax applied due to the unlimited marital deduction. So the good news is that this means estate taxes won't apply to most people. However, this $13.6 million estate exemption is due to sunset at the end of 2025, and if it's not extended, then the estate tax exemption for non-spouses will most likely drop to around $7 million, which will affect slightly more people. The federal estate tax ranges from 18 to 40%, and it's the responsibility of the executor or trustee to file the applicable estate returns, pay off any liabilities, and then disperse the assets to the beneficiaries. And Form 706, the federal estate tax return, must be filed within 9 months of death. However, 6-month extensions can be granted, but it's important to note that any taxes due need to be paid on or before the 9-month mark, unless the IRS grants an extension. There are a number of ways to minimize the estate taxes your heirs pay. If you're married, then the estate tax exemption can be as much as $27.22 million for 2024 when the second spouse passes. And what if your estate is over this exemption? Well, first of all, that's a great problem to have, and there's a few things that can be done. You could donate the portion of the estate over the exemption limit to a qualified charity. Many people prefer doing this as they can control where the money is going instead of the money going to the government. Another option is to set up an irrevocable trust. An irrevocable trust allows you to get assets out of your name and out of your estate. However, by using these kinds of trusts, you truly lose all ownership rights to the asset. You, as the grantor of the trust, cannot name yourself as the beneficiary either. And finally, you can pay for someone's tuition or medical bills by paying the service provider directly, and this won't count as a gift. Now, before doing something like this, it's important to consult with a professional to ensure that you're doing this correctly. Okay, so I know what you're thinking. Angelo, I don't have millions of dollars. How does this affect me? Well, that's where New Jersey's inheritance tax comes in. Jersey has a beneficiary class system. There's Class A, C, D, and E. So what happened to Class B? Well, that was removed back in 1963. The good news is that if you're a Class A beneficiary of the deceased, which includes spouses, parents, grandparents, children, stepchildren, grandchildren, and adopted children, so a pretty long list, then inheritance taxes don't apply. If you're considered a Class C beneficiary, which includes siblings of the deceased and children-in-law, then the first $25,000 is tax exempt, and then taxes on values above this range from 11 to 16%. Class D beneficiaries typically include anyone not listed above. For transfers of $500 or more, there's a 15% tax on the first $700,000 and then a 16% tax on everything over $700,000. And finally, Class E beneficiaries include the state of New Jersey, educational institutions, and nonprofits, and these are exempt from paying inheritance tax. So if an inheritance tax is due, then according to the state of New Jersey, the inheritance tax return must be filed and tax paid on the transfer of real or personal property within 8 months after the date of death. You should also note that if you and the deceased don't reside in New Jersey and you're not a Class A beneficiary, then you may still have to pay inheritance tax on assets located in Jersey, such as rental properties. Now, one way to minimize beneficiaries having to pay inheritance taxes is to gift money or assets to them while you're alive. New Jersey doesn't have a gift tax, so there's just the federal rules to worry about. In 2024, you can gift up to $18,000 to an individual for the year, or you can gift more than that. It would just count against your federal lifetime gift exclusion of $13.6 million, which is probably going to be pretty hard to hit. So to sum things up, having a proper estate plan in place to minimize the taxation of your estate can help protect what you've worked for. Estate taxes are paid by estates valued at over $13.6 million, and inheritance taxes are paid by certain beneficiaries in New Jersey, such as friends and more distant family members. However, through the use of gifting, charitable donations, and irrevocable trusts, you can avoid or minimize federal estate taxes, and by leaving assets to Class A beneficiaries in New Jersey, such as spouses, children, or parents, or gifting to the other beneficiary classes while you're alive, you can further minimize the Jersey inheritance tax burden. So if you found this information valuable, please don't forget to like, comment, and subscribe. And if you wish to discuss what I went over in this video for free, my contact info is down below in the description. Well, thanks for watching, and I'll see you next time.